shorts are finally beginning to be squeezed not just in AMC, not just in meme stocks as a whole, but across the entire market. Today I want to talk about why shorts are being squeezed and what's going to happen as a result. Stay tuned and let's make some money. Now guys, you may notice I'm back in my original recording studio, back from my family holiday. I had a great time, picked up a good tan, and not too much sunburn. But guys, now I want to dive straight in with the key information. So, Alessio Urban tweeted saying bears are increasing their bets against the wider market. This chart shows the net non-commercial S&P 500 E-mini futures position as of the 9th of August 2022. This excludes major banks being those commercial lenders, but includes retail investors, private investors, hedge funds and family offices. So these hedge funds and family offices have been increasing their short positions against the S&P 500 over the last month or two, while the S&P 500 has actually been rising. This means these family offices and these hedge funds are being squeezed. They're going more and more short, while the S&P 500 is running. Now you may say, Tom, isn't non-commercial just retail investors and not hedge funds, family offices or major banks? But Alessio Urban confirms, saying these are non-commercial traders, which doesn't represent the largest portion of positions, aka those major banks. This is hedge funds and individual traders. And again, to reaffirm that, Dave Lauer tweeted saying hedge funds are getting more and more short exposure on the market as a whole. He said it's getting close to the same level as summer of 2020, but that wasn't very smart back then. As Liz tweeted, she said the strong rally is not yet deterring hedge funds as they continue to increase short positions in S&P 500 futures. Positioning is most net short since summer of 2020. Currently, these shorts are being squeezed in the wider market as a whole on many of these growth and crypto and tech plays. They're going more and more short while the market is running. These hedge funds have a net short exposure almost as large as it was back in early 2020, just before the meme stock run up back in January 2021 and June 2021 after that. Now obviously the shorts have been increasing their positions on AMC, on meme stocks as a whole, and also the wider market as a whole as well, and these shorts are now starting to panic. We're actually at this really interesting point where hedge funds and family offices are increasing their short bets against the wider market, while these major banks are actually bidding the wider market up. These major banks are bidding the wider market up as a result of the positive recent inflation announcement, and effectively as this is just a bear market rally like I've spoken about in many recent videos. But it's causing this interesting dilemma where even though we're having a bear market rally, many of these hedge funds and family offices are losing billions, if not trillions of dollars. Obviously BlackRock lost $1 trillion. We're also hearing recent rumours of Citadel losing $90 billion, Susquehanna losing over 100, nearly 200 billion, and many other hedge funds and family offices taking on giant losses. These hedge funds are obviously shorting the market at a time when the market is running upwards, obviously causing these hedge funds to lose billions of dollars and effectively be squeezed. As they're being squeezed on their blue chip names and on the S&P 500 as a whole, this again just reduces the amount of available margin they have, it reduces their liquidity and brings them closer to the entire fund being liquidated. And obviously, if that happens and their entire fund ends up liquidated, it will cause the AMC squeeze, as when the fund shuts down, they have to close out of all of their long and short positions. The Vegas chef Andrew tweeted saying Jimmy Shill is going nuts. He said sell or die is a statement that would get 98% of us banned off of Twitter. Jim Cramer tweeted saying a memo to Sue Gove, Bed Bath & Beyond's CEO. You must know your balance sheet is so weak that you run the risk of not getting seasonal inventory. You should be fired if you don't offer equity right here to solve your problems and give you time. He said I often find CEOs are obtuse to the stock market. So I'll explain it real easy. Bed Bath & Beyond needs money. It can raise money at a price higher than where it sold a lot of stock. Now is the time, sell or die. Jim is obviously panicking for his short buddies that are massively short on Bed Bath & Beyond, GameStop, AMC and many other stocks that are currently getting squeezed in their plays. Therefore, he's trying to convince CEOs and companies like Bed Bath & Beyond to issue more equity to dilute the stock and give shorts the opportunity to cover at a low price. And guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 10 free stocks worth up to a whopping total of $25,000. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they officially state they do not sell your order flow to market makers like Citadel. Therefore, Moomoo is brilliant for buying those AMC and GameStop shares. Moomoo has also confirmed they will be issuing the ape dividend exactly on the 22nd of August. But it's not just shorts going more short on the wider market and being squeezed in the wider market, they're also being squeezed in the meme stock market as well. True Demon tweeted saying there's blood in the water today for the shorts. He said squeezes or run-ups are happening everywhere today. This is only just the start. Obviously, Bed Bath & Beyond was up massively yesterday from $16 all the way to $28 and above. It did pull back later on in the day, but in the pre-market this morning is running again. Again, GameStop is also up from $39 up to $44, Revlon is up from $8 up to $10 and above, and Torrid Holdings is up over the last few days from $5 nearly to $9. We've also seen AMC run up over the last few weeks from $15 to $25 and above, and it's still primed to explode even higher. Now, you may have seen at about 3 PM yesterday, both the S&P 500 and Bed Bath & Beyond and many other meme stocks tanking all at once. Wolf of My Street tweeted saying, was that a margin call or a liquidation? But Andy Lee theorised that it might have been the selling off of many stocks across the market as a whole for cash that's needed to buy back shares of AMC or of meme stocks as a whole. Obviously, these hedge funds sold short billions of shares not just of AMC but of meme stocks as a whole. These were sold off exchange in the so-called dark pools. Right around now or right around this time is the last day for AMC shares to be bought back, otherwise the shorts can't provide the ape dividend. So it seems like even though these shorts have been increasing their short positions on the wider market as a whole, they may quickly rush to cover these shorts so they can buy back these AMC shares before the ape dividend is announced. That's obviously causing meme stocks as a whole or the entire meme stock basket to experience a run very similar to January of 2021 or of June 2021 as well. And as Jesus tweeted, he said, absolutely. As Trey pointed out, short sellers tanked the S&P 500 today at 3 and 4 PM to flush out the meme names. That means it's either impossible or incredibly expensive to tank meme names on their own without pushing down the entire S&P 500. It's likely these hedge funds are now selling off stocks across the wider market, either to add to their short positions across the same market or to free up cash to buy back those AMC shares. And this is already starting to be seen with hedge funds and individual short traders that are starting to be squeezed and starting to be liquidated. Sal tweeted saying, and so the story of Short Destroyer comes to a brutal and hilarious end. He said he just received a death by margin call from shorting Bed Bath & Beyond and AMC as well. Short Destroyer publicly exclaimed that he had a 6-figure short position in Bed Bath & Beyond and in AMC as well, and it seems like he's just been liquidated and deleted his account. And as Will Me tweeted, he said, I bet at least one hedge fund and maybe more was Melvin today. Almost every high short interest play is getting squeezed or is running up today. And Armashin tweeted what he believes is the individual squeeze floors with their outcomes based on the average holdings of all AMC shareholders. If AMC squeezes to $1,000 per share, it wouldn't make AMC the largest stock in the stock market, and it wouldn't make AMC the mother of all short squeezes. $1,000 per share isn't crazy and would likely only receive local media attention. If AMC squeezes to $5,000 per share, then the largest 5 to 10% of apes get wealthy, and it will reach some major headlines and be on the front pages of some newspapers. If AMC squeezes to 10k per share, then at least 25% of all apes may have life-changing money. That will reach national headlines and will be on the front page of most major papers. If AMC squeezes to $25,000, then at least 50% of all apes have guaranteed life-changing money that will receive worldwide media attention and a massive amount of FOMO. If AMC squeezes to 50k, almost all apes are millionaires before taxes. That is a game changer, and history will mention us. If AMC squeezes to 100k per share, that's a once-in-a-lifetime opportunity. Everybody becomes millionaires, if not billionaires, before and after taxes. Textbooks and classrooms will remember us, and AMC will be recorded as the mother of all short squeezes for hundreds if not thousands of years to come. He said the floor is ours, the ball is in our court, so how do we want to be remembered? But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.